This video is based on the technical analysis of Tesla. And as you guys know, Tesla is a tech company that's listed on the Nasdaq Stock Exchange. And at this point in time, we are on the monthly chart. And on this chart, we can see that the market in the past had given us this head and shoulders pattern, as you guys can see, with the side being the left shoulder, this being the head, and the right hand shoulder being at this point. And it had had a neckline more or less at that point, and actually we saw the market or price breaking to the bottom side of that neckline and then heading back up to the neckline to test it. Unfortunately, however, the neckline was not able to hold price, and we saw the market, or rather price, actually head up to around this level, right? What we saw happen next is that the market gave us what seems to be an overextended W structure over here, right, where that first leg is much lower than that second leg, and similarly it has a neckline at that point as well. And in fact, this area over here is a very strong level of support, as we had multiple rejections at that point, right, as you guys can see. And you guys also know that whenever we have these patterns such as the W formation or W structure, we want to see price after breaking to the upside of that neckline, come back to the neckline to test it. And at that point is generally where we look for those potential buy opportunities, especially if the area aligns with any key numbers that we have in regards to the Fibonacci retracement tool. And if we were to utilize Fibonacci, we would see actually that the neckline of that overextended W structure actually aligns with the 61.8% Fibonacci retracement level, and there is confluence in as far as looking for potential buy opportunities goes. I hope you guys can see that, right? And in regards to confluence, as I said, we have this W structure, right? We have price breaking sufficiently above the neckline of that W structure, and then it coming again to the neckline to give it a test. And at that point we also have the neckline of that W structure aligning with the 61.8% Fibonacci retracement level. So what this means, as I said, guys, is that we have confluence and confirmation that indeed we should at this level be looking for potential buy opportunities, so because the structure, which is the overextended W structure, started at this point, right, ideally we want to see it end at that level in line pretty much with where it started, right? So as I said, guys, we should indeed, in my very humble opinion, be looking for potential buy opportunities at that level. I'm not saying that we should buy, I'm saying that we should look for potential buy opportunities. Anyway, from here, let's head down to the weekly and see what else is happening down there. Just bear with me. And just to recap, guys, remember on the monthly chart we spoke about how the market had given us this very nice overextended W structure, which has a neckline more or less at that point, and we said that we saw price breaking to the upside of that neckline, come back to the neckline to give it a test, and at this point where the neckline is where we should be looking for potential buy opportunities, especially because also the neckline aligns with the 61.8% Fibonacci retracement level. And also to add to that, this is a very strong level of support, as we had multiple rejections in and around that area, and it's actually a good area to be looking for potential buy opportunities, right? Another thing that I also want to actually bring to your attention on the weekly chart is that we actually have this candlestick over here, and what it is a liquidity candlestick. It is a bullish candlestick with a small body and quite a long upper wick, guys, and you know that it means that we have a lot of money in the form of liquidity, and that the markets will always go to where the liquidity is. So there is plenty of scope for price from this level to potentially head up to around that level. All we need, in my very humble, in this area over here on the lower time frames, is a small W structure where price would then close above the neckline, come back to the neckline again, and at the neckline is where I would look for further buy opportunities. We also need some reversal candlestick patterns, such as the bullish engulfing candlestick pattern, or at least a pin bar, in my very humble opinion, right? Or at least a pin bar which looks, if I can just draw it properly, let's have a look, which looks more or less like this, right? Yeah. But that's it in as far as my analysis goes. For the most part, I believe that we should consider looking for buy opportunities at this point.